Okay, we're about to start. And good evening, everyone. Before we start our webinar, let's do some sound testing first. So, audience on our YouTube live, please give us a response whether you can hear us. Okay, so testing, sound testing, sound testing. Testing 1, 2, 3. Can you hear me? Hi. Okay. All right. Okay. Received the response already. Okay. So I will start with my some introduction first. Okay. Good evening, everyone, and welcome to our webinars. Thank you for taking the time to join us today. So our topics for these evening sessions will be focused on micro crypto futures and exciting product series that provide the traders with a new and accessible way to participate in the digital asset market. So we are delighted to collaborate with CME Group and who will be sharing their insights on these trending topics. So before we begin, so let me briefly introduce myself. My name is Suling and I will be your host for this sessions. Just a quick reminder that before we dive in, all the content shared in this webinar is intended for educational and informational purpose only. It should not be taken as a financial advice. Please always trade responsibly and according to your own risk tolerance. Okay. Yeah, now we are also excited to announce that Micro Bitcoin and Micro Ether futures are now officially available for trading in Malaysia through Apex Security Berhad. So giving traders easy access to the global cryptocurrency markets with a smaller financial commitment. And now, it's my pleasure to introduce our guest speaker tonight, invited by CME Group, Mr. Jose Blasco. And here's the speaker profile. Jose is a versatile multi-asset trader with deep expertise in option, equities, futures, and currency. He is the principal and quantitative strategy of Tradictive PTE Ltd, where he develops advanced trading technologies and implements diversified strategy across global market. He is also an award-winning instructor, published author, and former engineering professor, combining technical knowledge, trading experience, and a passion for education. Jose regularly speak at international trading events. If you guys see if you guys frequently attending the webinar, you will be familiar with him. Yeah, and he's in the international trading events sharing his insights on market trend and trading innovations. So today he will be presenting on the topic from cash to crypto, making digital assets work for you. And so without further delay, let's welcome Mr. Jose Blasco, and I will now hand the floor over to him. Hi, Jose. Your turn.
Hi, Suling. Hi, everybody. It's a real pleasure to be here. I am very, very excited about tonight's session where we're going to be diving into crypto assets, but crypto assets the right way. So it's going to be, let's say, a discovery adventure for the majority of the attendees, and I'm very excited to lead that. Thank you so much, Suling and Apex Securities for having me, and of course the CME as well for organizing all of this. And welcome everybody as well. So let's get started with the session. The first thing I would like to do is to kind of point at the title of the session because there is already some meaning there.
Yes.
We are talking about from cash to crypto. That means already many things because many Investors look at crypto like a form of cash. And today we're going to be looking at this particular cryptocurrency in a very interesting, different format, which is going to be crypto futures, which is going to help us to be exposed to an amazing market, which is the market and the financial market of the cryptocurrencies. But we're going to be exposed to it the right way, right? So the idea is making digital assets work for you, because there are many people in countries around the world, and they may get excited about crypto because, let's face it, it's very exciting. But next thing you know, they get invested or they get exposed to trading products related to crypto, which are the wrong ones. So the idea, and then they get in trouble, and then there are a collection of problems that we obviously need to avoid. So today, it's going to be my pleasure to go over crypto more generically, but also more specifically get into crypto futures, and not only get theoretical and use slides, but also move into the live markets and do some market outlook, look at what's happening in the markets, what's likely going to happen, but also plan trades. As Suling said earlier, of course, everything that we do is for educational and demonstration purposes, so this is not financial advice. But I am a very pragmatic guy, and therefore, in that sense, I will share how I approach the markets, and hopefully this is going to be good education, good learnings for everybody, and then you could implement it in your own way. But hopefully you will grab some of the essences of my teaching today that will be useful to you all. So super excited to be here, and therefore, let's begin.
All right. The time is yours.
So, thank you so much, Suling. And by the way, as we begin, and for sure we'll have Q&A at the end and all of those things as always. But I would like to welcome everybody at any moment in time to type on the chat box. I'm watching the chat box. Of course, this is being streamed both inside of a private webinar room as well as live on YouTube. So I don't see you if you're on YouTube, but Suling does. So if you have any question, please type it in real time. Don't wait until the end, so we can grab those questions, and that way we can interact. I'll catch those questions on the fly, and that way everybody gets what they need when they need it. And that way this session counts. Okay, my intention again is that this session counts. Okay, we gotta make a difference today understanding crypto. Anyway, so the big picture. Okay, so we have the world of digital assets out there, right? So we have the Bitcoins of the world, the Ethereum of the world, we have tokens, we have stable coins, NFTs, so many digital assets out there. And not only they are out there already for a number of years, they are growing, and they're growing fast. Now, while crypto in general, crypto assets, digital assets, cryptocurrencies, however you want to call it, it's something that is indeed very relevant in 2025. Sometimes I have conversations with traders and I encounter all sorts of mindsets, right? Sometimes some of you may feel, wow, crypto, maybe one day is for me, but right now I feel it's too complicated, too complex. So again, one of the good things about today is that we're going to really simplify how to attack crypto in a way that is safe, but also very simple. Okay, so no worries about that, even though, of course, the ecosystem is evolving. So sometimes it could feel a little bit complex. So precisely because sometimes it could feel a little bit complex, many times I also talk to traders who got in trouble. And what I mean by that is that, they got, an ad on Facebook or, YouTube or whatever. And because they watched that ad, they ended up downloading some crypto app that probably was on an unregulated company from, whichever country in the world. Could be Malaysia, could be the Seychelles, or could be Vanuatu, or you name it. And next thing you know, those investors, they have their crypto app on the phone, and they buy or sell crypto and maybe Bitcoin or Ether or other coins. And next thing you know, one day they want to withdraw and they cannot withdraw, and they wonder why, and and they get in trouble, right? And we need to understand, this is one of my key objectives today, what is safe and what is not safe in the world of crypto. Okay, and again, the solution that we're going to discuss today on how to use crypto to your benefit is going to be absolutely 100% regulated, not only in Malaysia but globally speaking. So it's the way to do it. Okay, it's the way to do it. But like everything in life, we don't know what we don't know. And therefore, there are times where, again, you download an app on your phone and now you're, oh, look at that. This app allows me to buy Bitcoin. Let's try and see what happens. And obviously that is a way to do it that carries risks. Okay, the app can be hacked, sudden closures, opaque pricing, all sort of various problems. So we're going to be leveraging futures, which futures, futures is the largest market in the world. Okay, if you think of I'll give you an example. I'm going to do a little comparison here so you understand the magnitude of what we're talking about. So if you think about the New York Stock Exchange, which I believe that everybody in the world knows that New York, Wall Street, right, is the largest exchange in the world. Well, guess what? The New York Stock Exchange is a stock exchange like Bursa Malaysia. So they trade shares in New York. And is the largest exchange in the world. But guess what? The futures exchanges, which are in Chicago, which is the other very important, relevant place in the world where trading takes place. So Chicago is 3 times the size of New York, right? And most people don't know that because futures trading are typically traded by professionals. Of course, the size is way larger. That's why it's so much larger. But many individual traders don't know that because individual traders, before crypto and Forex and all those markets, maybe they just think of trading Bursa Malaysia shares. Sorry about that, guys. I thought my screen was sharing. Just realizing I was not sharing my screen. Big apology there. Sorry about that. No big mistake. Anyway, I believe now everybody should be able to see the screen. Sorry about that one more time. So, in other words, we are talking about tapping into the futures markets, which are the largest in the world, amazingly regulated. And guess what? We could utilize crypto assets in those futures exchanges, right? And now we are trading futures like you would trade gold futures, like you would trade oil futures, like you would trade FKLI futures, like you would trade FCPO, palm oil, crude palm oil in Bursa Malaysia. Same thing, but now it happens to be your Bitcoin, your Ether, etc., in a totally safe and regulated environment. And the issue that this could have had, which it doesn't, but it could have had, is that years ago, futures were very large, and therefore you would need a very large account to be able to trade crypto futures. But as you heard me say, that was years ago, meaning that now, since a number of years actually, the Chicago exchanges, in this case, CME, the Chicago Mercantile Exchange Group, have released what we call micro futures. So now with the micro futures contracts, you are trading futures, but using a contract size, which is very adequate for individual traders. And now basically we have eliminated all the downside and kept all the positives, if you wish. So we're gonna dive deeper into this, way deeper. We're gonna have an impacting session around these concepts, and the format of the agenda today would be to have an introduction, which I will skip because Sulin introduced me very kindly already. So this is about you, not about me. So I will skip the introduction. And then we'll dive into understanding digital assets in general, because I assume that some of you watching the session today may have traded crypto before or futures, but I also assume that some of you may have never traded crypto before, or maybe you have traded something else but not futures. So no worries, we will understand crypto, we will understand why crypto matters, then we will understand futures, and from there we'll do some trading in action. So we will look at examples, and then we will look at the market real time, and we will see what's available, and we'll plan a couple of trades so we understand all the mechanics of putting a trade together with futures markets for crypto. And then beyond that, then we'll go over a market outlook. And because I assume that everybody attending today is different, some of you are short-term traders, some of you are long-term investors, and some of you probably somewhere in between. So I will have a market outlook where I will go over what to expect from crypto next week, what to expect from crypto next month, what to expect from crypto next quarter, and what to expect from crypto 1 year from now. That way, no matter who you are, no matter how you trade, no matter your account size, no matter your preferences, today you're going to be able to really utilize a lot of the teachings in your own account with Apex Securities, and just seize the opportunity safely with the risk management in place and do it the right way. In parallel, I will share some QR codes in the session where you can also access some bonus resources. All of this is for free, of course, just to keep educating and documenting yourself so you understand better CME and crypto and futures and trading and risk management. And again, you will love it, I'm sure. And questions and answers, as I said, we'll do it along the way. Okay, so please type your questions on the chat box anytime. Okay, anytime. So I'll skip my introduction here, and I will give you here the first QR code, which is a QR code that will lead you to our TradingView page, where you have a few hundreds of trading articles that are being published in a regular basis with updated charts, with updated market opportunities, with updated lectures that talk about trading products or trading strategies or management strategies, all sorts of things related to trading, no matter what you trade, and definitely applicable to crypto futures. So feel free to scan the QR code, and when you get to our page, you can follow us, you can like, or in TradingView it's called boost. You can boost the articles if you'd like, and that, of course, is appreciated. Even though you don't have to do any of that, you can just go there and read the articles and enjoy. Anyway, so let's begin with understanding what are digital assets, okay? And I assume that many of you already know what's a digital asset. So please bear with me. I do need to explain this quickly. So for the ones of you that are less familiar, you understand, so then you can follow the rest of the session. So when we talk about digital assets, and specifically relevant for today's presentation, we are thinking about Bitcoin, Ether, and stablecoin, right? They are more digital assets, okay? They are more digital assets. It could be NFTs, it could be smart contracts, there are many more things. But again, since today we are talking about cryptocurrencies, so in our mind, we should be thinking about Bitcoin, Ether, and stablecoins. And stablecoins, as the name suggests, being very pragmatic, it's something that I will not discuss much today because, as the name suggests, it's stable. So stable means that basically you look at a fiat currency such as the US dollar, and instead of having US dollar on paper in your wallet, so paper notes of dollars in your wallet, or you have dollars in a multi-currency account with your bank. So instead, you have dollars in crypto format. Okay, and this would be what's called a stable coin, which is $1 equal one coin. So you have the US dollar, the USDC, for example, could be one of the stable coins, which again is 1-to-1. So in other words, you cannot really make money with this because you are just basically replacing a currency by another of the same value. Okay, but now I wanted to mention it because it's relevant, and more, little by little, people talk about it, and I wanted to at least share this term. Now, the meat of the presentation today will focus on Bitcoin and Ether. Bitcoin and Ether are cryptocurrencies. You could also call them coins if you would like. So it's a digital coin, a digital currency, and as all currencies, is a way on how to store and exchange value, right? That it's a currency, it just happens to be stored on the blockchain, and therefore there is cryptography involved. Okay, so let me explain this at the speed of the light, just so everybody understands what is a cryptocurrency. And I'm going to use a simple example here. So let's pretend we are back to 2020, and this is the pandemic time. Okay, and this is not a very good, maybe not a very good memory, but you will see why I'm using this example. So let's say we are back to 2020, it's the pandemic time, and let's say the whole country has been in lockdown, and no one is allowed to leave their buildings, not even to go to the supermarket. So everybody's stuck inside their buildings, and let's say that the building is very large, and inside that building, different people have different things. Some people have planted tomatoes in their balcony. Some people have chickens in their balcony. Whatever that is, there is a need within the people that live in the building to exchange goods and they cannot go to the ATM to withdraw more ringgits because they cannot leave the building. So, there is this gentleman or lady that has a printer at home and decided to print some sort of a voucher that then within the building, it could be used to exchange goods. And because there is trust between the people that live in the building, so, while the person that has the printer could, without telling anyone, print more of those vouchers and take advantage of the system, because there is trust, so in the end, everybody trusts that those vouchers have value, and they choose to use the vouchers as a valid way to exchange goods, right? Great. So that would be a form of a currency. And it works, putting on the side how simplistic my example was, because the world of money is way more complicated, but I guess that's okay to begin the conversation. So the reason why it works is because there is trust. The people inside the building, they all know each other, they trust each other, and therefore it works. But now imagine that we are trying to do the same thing across the world. So how do you trust people from the other side of the planet that, they're sending you the right amount of currency, and how do you control the value of the currency? You cannot trust all those other people that you've never met in your life, right? So then, when we talk about Malaysian ringgit or US dollar or Australian dollar or Singapore dollar, we trust those currencies because there are central banks in those currencies, and the central banks reach agreements, and there is an exchange rate. And in Malaysia, we have Bank Negara that regulates the whole thing. And then, therefore, we trust the ringgit. Even when we go on a vacation trip to another country, we can exchange, and we trust the exchange rate is real. So it's all good because we have those central entities that control the currency, and they therefore add that trust element to currencies around the world. But again, back to crypto. With crypto, it's a decentralized system. There is no central authority of anything. So how do you trust it? How do you trust the system? How can you trust that someone is not, creating currency, and no one knows, and next thing you know, that person became a multimillionaire out of thin air? How can you trust all of this? That's where the cryptography comes into place. So every cryptocurrency that exists is registered on a digital ledger that we call the blockchain. And for transactions to be registered on that blockchain, a cryptography, an encryption and cryptography type of process need to happen behind the scenes, which is beyond the scope of today's presentation, but there is a process happening. And basically cryptography means that you are creating an authentication type of thing when it comes to everything that is on the blockchain. And because everything is authenticated, so now you can trust it. And because you can trust it, so now those currencies, they have values and they can be exchanged, and the whole thing now becomes useful. So sorry for the long explanation. What I kept it extremely simplistic, but there is so much more to explain when it comes to understanding cryptocurrencies in general. But again, at least I wanted to give this version 1 of the story. So for the ones of you that have never used crypto, or crypto exists, but you never really understood, so hopefully this initial explanation helped you to understand what they are. Now, the problem, as you could imagine, is that while it makes a lot of sense, and it's a huge invention and a huge transformation from a technology point of view, amazing use of the internet, isn't it? Well, the reality is that you could imagine that, since there is no central authority regulating, and so it could be the Wild West, right? So like, for example, if you transfer Malaysian ringgit with your bank accounts by mistake to someone, you can go to a bank office and, maybe they contact the client and the client returns the money to you because, there is a bank and there is regulation and, things can be done. But with digital assets, it's all decentralized. It's all, thanks to the cryptography, it's all real, it's all authentic and genuine. But there is no regulation and useful practical applications of what can be done with the money with crypto. So you could imagine that many people that acquire, let's say, Bitcoin, there are times where they get in trouble. For example, to access their Bitcoins, they need a key. We have the private keys and the public keys. So they need a key. Right? It's like a username and password to get into a website. It's more complicated than that, but it's kind of like how you get access to your currency. But what if you lose it? There is no place where you can go to reset the password. Okay, so again, there are many problems. So again, it's an amazing invention. It's very relevant. We love it. It's fantastic. You can certainly use it to spice up your investments in very interesting ways that you will discover today. But there are many, many problems associated with the cryptocurrencies on the blockchain. So the idea is take all the benefits and all the beauty of this new ecosystem where we could add diversification. We can do many things with it. We can fight inflation. We can do so many things with this, but do it in the futures exchanges, so we don't have to suffer any of the lack of regulation or someone stole your private key or any of those all those products. Anyway, again, for the ones of you that know a lot about crypto, that was a very basic definition of what are cryptocurrencies. For the ones of you that didn't know, hopefully that was good enough. So at least now you know a bit more about what's a cryptocurrency. So they represent a new asset class, totally different compared to stocks or bonds or commodities, which are the traditional assets that people have used to invest or trade. It's increasingly seen as part of a diversified portfolio. If you ask me this question 5 or 10 years ago, it was only very techy people that would be invested with crypto, or also maybe some of the most advanced hedge funds and investment funds around the world, but that's it. Whereas if you look at it in 2025, it's everybody is into it, both professionals at all levels, even like insurance companies that by definition they have extremely conservative investments and things of that sort. They are big time invested in crypto assets. So again, in 2025, we cannot ignore this ecosystem. We just need to be very careful, because if we were to trade it using one of those mobile apps that you downloaded, almost as an accident on your phone, so you may get in trouble. Whereas if you trade it with the right broker, the right software, the right exchange, then it's fantastic, which is what, again, for example, those insurance companies are doing. So what are the key differences between trading traditional assets and crypto? So one is 24/7. Crypto never stops. If you trade Malaysian stocks in Bursa Malaysia, they have an opening time of the day, they have a closing time of the day. Certain assets stops trading during the lunch time, isn't it? So crypto never stops 24/7, including the weekend. Okay. Now, crypto has the reputation of being high volatility, whereas other assets are typically seen as quiet. Okay. And you know what? Let me bring a chart to the screen. Okay, you will see me alternate a lot of times in today's presentation between a PowerPoint presentation and charts. So this is Bitcoin, okay? And this is a stock in Bursa Malaysia that probably all of you have eaten in this restaurant. This is Oriental Coffee. So you tell me if this is not volatile or what, right? This is very volatile. Not too long ago, less than a year ago, that stock was, let's call it 50 cents or a bit more than 50 cents. Now it's 150. This is 300% return. So that's very volatile. Okay, and it's a stock. Whereas if you look at Bitcoin, right, and you look at it, since 1 year ago. So if we look at Bitcoin since 1 year ago, okay, for whatever reason, the data is not showing here on my screen. Interesting. I should have a box there. Okay, let me click here. Okay, I should have a box, but my screen here is blank for whatever reason. Okay, little computer glitch, not a problem. But in any case, you can see, if it went from 92,000 to 100 plus, so that's a great return. But this is pretty stable. Okay, now if you were to look at cryptocurrencies in 2010, in 2009, in 2015, so yeah, you had swings of 100, 200% up, 50, 70% down. So it was very, very volatile, and it still has this reputation, but it's not the case at all any longer. I mean, it's still more volatile than an average stock, but it's not crazy volatile at all. So those markets are, again, given the amount of capital entering those markets, because again, even insurance companies use them as part of their diversified strategies, and that's a lot of money coming in. So the more money comes into a market, the more stable it becomes. And this is what's happening to crypto. Later, I will show you some volatility charts, and you will be able to see that visually. Now, crypto, it's digital only, right? If you were to buy Bitcoin on the blockchain, so it's digital only. Where other assets may exist physically. For example, if you trade gold futures, gold exists as a real physical thing. Okay, and if you were to trade it either physically or you were to trade it as a futures contract, for example, with Apex Securities, so then you would need to put some money in a trading account with Apex Securities. So there is a custody, right? A custody. So it's a different format. So custody is the normal thing. You want to trade stocks in Bursa Malaysia, you need to open an account and fund it. You want to trade futures, you need to open an account and fund it. And the beauty is that you do it with Apex, and this is a company which is licensed and regulated under Securities Commission, Bank Negara, and the whole layer of legality that protects investors in Malaysia and beyond. So you are totally okay. Whereas if you do it digital only, okay, yeah, your Bitcoin is on the blockchain, but now, again, you lose your private key and that's it. You will never be able to access that money anymore, ever. No way, impossible, right? So it's a totally different ecosystem. Emerging regulation for crypto. So there is limited regulation in the present, more to come in the future, but it's changing. Whereas when you trade futures, when you trade stocks, again, you open an account with Apex Securities, and whatever you trade with that account is mature. It's mature. Today, we're going to be talking about trading crypto futures with Apex Securities with the same future account you already have. And if you don't, so you just need to talk to Apex Securities and they will tell you what to do to open and fund an account. It's very simple. Okay. With that same account, you can use to trade gold or stocks or whatever you trade with Apex. That very same account with all the mature regulation is what you need to trade crypto futures. Exactly the same. Because bottom line is futures. So myths versus reality, okay? There is a lot of confusion out there. Let me point at some important misconceptions. Myth: crypto is only for techies or for the wealthy. It could have been like that, and it was kind of like that for a long time. No longer is the case, thanks to micro futures, which now you can trade safely. Safely is very simple. You don't need to be a techie at all. And it's accessible to all traders because the micro size requires very, very limited capital for you to be able to trade it. Okay, I'll give you a number later. I'll be very concrete with specific figures, but just to we can have a number in our mind. Think about 150 US dollars. Okay, anywhere that figure or anywhere above that would put you in a position where you can be trading futures like professionals. Okay, you are using futures contracts that are executed and traded in the Chicago Mercantile Exchange, the CME. So very, very, very simple. Myth: you need a digital wallet. Reality: you don't need a digital wallet. You can trade crypto future in your Apex Futures account. So you don't need a digital wallet. You don't need private keys. You don't need to have a wallet installed on your phone and your phone is stolen and you lose the key. No need for any of that. Okay. Myth: crypto is unregulated. Reality: yeah, crypto is unregulated. If you trade it on the blockchain, in many places it's unregulated or very little regulated. But CME contracts, it doesn't matter if you trade gold futures or FCPO, palm oil, crude oil, or if you trade S&P 500 futures, or if you trade Bitcoin futures, that is a contract that is traded in this case, in the CME in Chicago, is therefore regulated by the CFTC, which is the largest regulatory body in the world for derivatives in the US. And all that regulation is adopted and approved by Securities Commission and Bank Negara. So the whole thing is totally regulated. What we are talking about today is trading safe. Okay, I mean, you can be right or wrong in your trades. Therefore, you may or may not, you may make money or you may lose money, but that is because you were right or wrong on your trade. But when it comes to having surprises, such as, some hacker has stolen your Bitcoin, that cannot happen because you never owned Bitcoin on the blockchain. You had a trade on a trading account with Apex. Okay, so a totally different situation. Now, crypto matters because it provides a collection of benefits. Of course, I will also talk about the downside. I am a trader, so I'm always thinking in terms of risk and reward. So I'll talk about the reward first, but next slide will be the downside of crypto. So diversification across asset classes, that's one benefit, right? So if you look at, well, take a look. If you look at the S&P 500, so this is the S&P 500 futures, okay, making all-time high. If you look at gold futures, making all-time high, right? So all school of thought would suggest that to be diversified in your portfolio, maybe you want to have equities and gold. Well, guess what? You are not diversified at all. Those two markets are doing exactly the same thing. Even though, on paper, if you read an old book, it will tell you this is how you get diversified. Well, the reality is that if you look at Bitcoin, the shape of the chart is very, very different. And this is how diversification looks like. You want to be exposed to assets that move differently. Because if all the assets move the same and you happen to be a lucky person, congratulations, then you make double the money. But if you happen to be a normal person, not even necessarily unlucky, there will be times where those markets move against you, and then you have two markets moving against you at the same time. So you want to have assets in your portfolio who look different, which is basically saying now you are adding real diversification. So as you can see, crypto, in this case I was showing you Bitcoin futures, looks different. So that's one benefit. Hedge against inflation and currency risks, right? So as inflation hits almost every country in the world, having a hedge against it, it's very useful, because you may lose money every day because, buying food, buying coffee, anything that you consume becomes more expensive, or because Malaysian ringgit changes its value, and therefore it impacts the prices of goods and services that you use every day. So that's a problem. How can you fight it? It's very difficult to fight. But guess what? Crypto has shown historically a pretty good correlation with inflation. So when inflation around the world goes up, crypto tends to go up. So if you have exposure to crypto in your portfolio, and the world is becoming inflated and prices go up, which is a bad thing at a personal level, guess what? You are making some money, or you are likely going to make some money with crypto futures in your account. So then you can collect those profits to offset the extra cost of living because of inflation. So that's another great benefit. Access to innovation and growth sectors. Okay, well, a moment ago I talked about Bitcoin. If I was to look at Ethereum, okay, so this is the micro Ether contract. So Ether is a cryptocurrency which is more than only a currency. Bitcoin, it's quite, how do I put it, quite normal. It's just a currency that lives in the blockchain, but it's a currency. That's it. Now, Ether lives in a blockchain which is more intelligent than Bitcoin. Therefore, with Ether, you can do things more. The blockchain of Ether is called Ethereum, which is why sometimes you may hear people call this currency Ethereum, which the reality is that the currency is called Ether. So Ethereum is the blockchain where the currency lives. So Ethereum is a blockchain which is more advanced, and you can do more things with it. For example, you can do what's called smart contracts. So maybe you want to close a rental agreement with a tenant, and the tenant is going to pay you with Ether. So the payment itself could have the rental agreement built in the coin. Okay, it would be a token, technically speaking. It's not right for me to call it a coin, but a simplistic way to think about it is that the currency itself carries with it the contractual agreement that imply the payment. So in other words, you can do other things with this currency beyond only using it as a currency. And therefore, if you were to be invested to currencies like Ether, so now you are tapping into something else. It's not only a currency. You have something else built in the currency from an intrinsic value point of view that could be very interesting and appealing to you, and also another source of diversification. Now, downsides. Volatility. So cryptocurrencies have shown greater volatility compared to other assets. So if we look at the volatility of Ether, I'm just going to look at historic volatility. So the number you're about to see here, 84, okay, or with the Bitcoin MBT1. MBT1 Bitcoin is 38%. So 38% is the projection either up or down in 1 year's time. So at the speed at which Bitcoin is moving, Bitcoin is likely going to be either up or down by 38%. Ether, 84%. And here you can see what I was mentioning. As those currencies become more relevant, they become quieter. Okay. Notice that some time ago, Bitcoin was moving at a rate of 80 something percent. Now it's moving at a rate of 38, where Ether, okay, MET for micro Ether. So Ether is currently moving at a rate of 84, where some time ago it was moving at a rate of 133. So Ether is less large compared to Bitcoin, and therefore is more volatile. If you were to look at markets like FKLI, like Bursa Malaysia, for example, Bursa Malaysia moves at a rate of 6.86% up or down in a year. Okay. If you look at the S&P 500 in the US, which also trades with the CME, that's 19%. So Bitcoin is 38, is more volatile, but it's not like it's crazy. There are times where equities are moving at a rate of 70%. Okay, so Bitcoin and Ether these days are markets that, while they are a bit more volatile than other markets, they are not crazy assets at all. Okay? Again, as I said, even insurance companies, which are probably the most conservative investors around the world, even those companies choose to use them as part of their diversification, and they have decent allocations in those particular assets, which is why they became so large. So again, the reputation of crypto assets to be volatile, on one hand, is fair. On the other hand, it has to do really with the fact that if you go back to 2015, 2013, 2017, so at those times, the volatility swings were humongous. They may have moved 200% in a year and things of that sort, and that was, that was beyond healthy. Okay, but that's no longer the case. From a regulation point of view, the frameworks are evolving, and from a liquidity and security risks, well, of course, in an unregulated market, you got tons of risk. But again, one more time, when you trade crypto futures, that doesn't apply to you. You have all the regulation in the world, you have all the liquidity in the world, because it's happening in the Chicago Mercantile Exchange. So not a problem. Okay, but if you do it on the blockchain, then yes, regulation and liquidity is a problem. So take a look how the volatility, okay, here's the micro Bitcoin, and the blue line is the volatility, what I showed you a moment ago. At the time of the screenshot, it was 31%. Today, real time is 38%, as you just saw. But notice how, if I was to draw a line horizontally, the blue line is going down, isn't it? So this market is becoming quieter. And there is spice on it, okay? So 31% a year, it's definitely not bad. Plus, you can even trade it intraday, up and down. So if you want to be active, there is more to do. But if you want to be passive and think about percentage return per year, so the potential is definitely juicier compared to equities, okay? While it's not a market only for the crazy any longer, okay? Sorry for this bad humor. Hopefully it makes sense. Anyway, so with CME futures, now you can trade micro-size contracts. And I'm going to explain what are futures and what are futures contracts and what are micro futures contracts, okay? For the ones of you that never traded futures. Those contracts are cash settled. So in other words, if you were to get into a cryptocurrency trade using futures, so you use the micro futures, micro Bitcoin, or the micro Ether, and you were to get to what's called the expiration date of the futures contracts, whatever profit or loss the trade generated would be cash settled in your account. But at no time you have a transaction on the blockchain, and therefore at no time you need a crypto wallet and a private key and coins and the whole complexity and problems and lack of regulation that we discussed. So again, when you trade with a CME, the whole thing that you are doing is no different than any other trade that you do with futures. So trading Bitcoin futures, it's totally equivalent compared to trading S&P 500 futures or NASDAQ futures. those are futures contracts that on expiration will be cash settled. And by the way, I'm using the term expiration because this is when the cash settlement will take place. But know, if you are new to futures, know that when you trade futures, you don't have to wait to a specific date in the future, which is the expiration date. Not at all. You could trade futures intraday in and out, 5 minutes, in and out 5 seconds, in and out 5 hours, no problem. You have total freedom on when to get in, when to get out. There just happen to be an expiration date, or if you hold it until then, which is 3 months later, then you get a cash settlement. Okay, so easy, safe, regulated, transparent, all of the above. Now, on top of that, with futures and crypto futures, you have another fantastic benefit that you will not have if you trade cryptocurrency on chain, if you trade on the blockchain directly, which is the fact that with futures, you can go long or short, both. Going long means you buy, and therefore you profit when the markets go up. Going short is the opposite. It's a technique that is utilized to make money on the way down. I have not seen questions so far on the chat box. Hopefully everything is going well on your side. In case you haven't noticed, I have the tendency to speak slightly fast, okay? So hopefully that's okay. I love this as well. I'm, as I said at the beginning, excited to be here, okay? So all of this is the reasons why sometimes I speak a little fast. If it's too fast for you and you need me to repeat something, please type it on the chat box. Super happy to go back and review something that you need. If you have any question, or for example, you don't know what is going short or shorting, you don't know what it is, maybe you never did it, just make sure you share that with me on the chat box or with Suling, and we'll explain that with detail, okay? But in the world of futures, okay, even if you never did it before, just know that going long or going short is just as easy. Look, if I want to go long, I get rid of this chart below just to have more space on my chart. If I want to go long MBT, one exclamation mark, which is micro Bitcoin, okay, I just click on the buy button, okay, buy button. If I do it with a market order, I click buy, one contract, and I'm long, okay? Now, if the market goes up, I make money. If it goes down, I lose money. Right now it shows minus 4.5 because since I purchased, it went down a little bit, okay? If it was to go up, I will make money, okay? This is going long. This is something intuitive that most people understand easily. I'm gonna exit the trade, close the position. Later, I'll plan a trade properly, okay? This is not how to trade. But I want to demonstrate now going short. To go short, you just click on the sell button. And the moment you click on the sell button, you are now short. So if the cryptocurrency goes down, which Murphy's law maybe here now and it goes up, we'll see. But if it was to go down, now you make money. Okay? So 111.64, so 100,011, 640. So I'll focus on the 640. Okay? So if it goes down, okay, I'm gonna make some money. If it goes up, I will lose some money. You know what? Let me look at this in a small time frame so we can see it better. Here we go. So my entry price, here we go. This is much better. So my entry price was 111,640, and now it's going up. It's 785. So then it's showing me a little bit of a loss. If instead of going up, it was going down, it would show me a profit. Again, later in a moment, we'll plan on trades properly because this was just total improvisation, which is absolutely not how to trade. But the point I wanted to make for the ones of you that didn't know is that if you want to make money on the way up, you just click on the blue button. And if you want to make money on the way down, you just click on the red button. And each platform is different, and Apex Securities got multiple softwares available to trade, but all of them got a blue and a red button, no matter how it is. Okay? I am using TradingView today for this lecture, but Apex got many other platforms which are, even better. But all of them got a blue and a red button. That's the point, right? So the beauty of using futures is now you can benefit from the CME regulation. You can go long, you can go short, you can have those micro contracts, etc., etc. All the benefits that we mentioned, right? So what can you do now? Well, you can apply your trading strategies, which probably you are a trend follower, or maybe you are a range trending trader, or maybe you are using crypto for hedging, or maybe you are doing mean reversion and you do scaling and scaling out. And there are many, many different techniques on how to use it. Later, I will use real-time charts to plan on a couple of trades properly, and you will see this demonstrated, right? But the sky is the limit. That's what I mean here with and many more applications. Anything that you could do with any trading market, the way you trade it, the way you prefer to trade it, the way your trading plan says you should trade, any way that any technique you use to manage your risk, the whole thing that you do in mature markets, like maybe you trade Bursa Malaysia, FCPO, you name it, or NASDAQ futures in the US, the same thing can be done with crypto futures. So here's an example. And this one, I will just flash it, okay? And later, I'll come back to this slide and explain it properly. So here's the micro Bitcoin, MBT, M for micro, BT for Bitcoin. And at the time of the screenshot, two lines were identified on the chart using technical analysis. The below line is a support, the above line is a resistance. So let's say that's you. And let's say you studied technical analysis and that's what you like the most to trade. And then you just saw there an indecision candle. So now you're like, okay, I don't know what's going to happen, but if the market moves up, I'm going to buy there. And if it keeps going and it gets to the upper purple line, I'm going to take profits here. And if it goes against me after I bought here and it goes down, then I'm going to have a stop here and get out of the trade for a limited loss. Okay, so let's say that's your trade plan. And you did that, and that was a beautiful trade. It went all the way to your target, so congratulations, right? Now the question is, how much did you make? How much did you risk? How much capital is required to do this trade? Again, we're going to talk about all of this with detail as we progress in the session today. But the point is that this chart, which is just a very generic chart, resembles like any other chart that you have seen before, which is one of the points I'm making today, is that trading crypto futures is as simple as, any other thing. Maybe you are used to trade Tenaga, a stock in Bursa Malaysia, right? So these are shares. Well, instead of Tenaga, now we do MET, which is micro Ether. You look at CME, Chicago Mercantile Exchange, and you have multiple expiration dates because this is futures. Typically, we pick the one on the top, one exclamation mark. This is what we call the continuous contract. And here is your continuous chart of micro Ether futures, which is tradable using any other technique that you use, no matter what you trade. So, anyway, I would love to get a little bit of feedback from you all. If you are on YouTube and everything is okay, just type okay. If you are in the private webinar room and everything is okay, just type okay. If you need me to repeat something, or I'm speaking too fast, or anything was confusing, please let me know. And either myself or Suling, we're going to take care of it. So we can help you better in this webinar. But anyway, so far I have accomplished, let's call it one goal, which is hopefully understanding crypto, even though we could spend hours and hours talking about crypto. But understanding crypto hopefully now is understood a little better for the ones of you that never traded Bitcoin or Ether, and you're like, what's that? So at least this is a bit better understood. Now the second goal I want to tackle is understanding a little bit better futures. Because we're going to trade crypto futures, which means that the product that you buy and sell, okay, is going to be called contracts. If instead of trading futures, you were to trade Tenaga shares, the product that you would buy or sell is shares. But because we trade futures, micro futures contracts, the contract that we buy and sell, if I click buy and I say I want 10, so that's going to be 10 micro contracts, 10 contracts. So we need to talk about contracts and how do they work. And if you understand contracts, that's it. Now you understand futures. Okay? It's actually quite simple. So contracts are standardized agreements to buy or sell an asset at a future date. In other words, if you buy a contract and you wait to the expiration of that contract, which is the future date, then you will get delivery of the contract, which in this case you don't, because it's cash settled. But let me tell you that if instead, out of curiosity, that if instead of Bitcoin futures, it was oil futures, and you bought oil futures contracts, and you waited to the expiration date, then you will get real physical delivery of real oil, which if you are Malaysia Airlines, probably you want that, okay? But anyway, if you are just using oil to make a profit or to attempt a profit out of trading the marketplace, then you never wait for the future date. Even though it's called futures and it's because there is a future date expiration, you never wait. You buy and sell whenever you have to buy and you have to sell, and you never wait for that expiration date. And in the world of crypto, on top of that, if you were to wait for that future date, and let's go to an extreme, talking about safety. Let's say you got distracted and you should have closed the trade, but you didn't. Well, apart from the fact that Apex Securities will get in touch with you and tell you, hey, expiration is approaching. Are you sure you don't want to roll the trade or do something with it? Apart from that fact, let's say you got totally distracted and you lost your phone and everything. So no problem. You get to the expiration date and whatever profit or loss that the trade implied, that would be cash settled. So you would see a plus or a minus in your trading account, but you will not get physical delivery of anything. Even though it's called futures, you will not get physical delivery of anything. So it's a super simple asset to trade and super safe because you don't need to deal with the underlying. I'll make an additional point to this in a moment, which is super important. But again, all of this process of trading those futures contracts will take place in a regulated exchange. It will not be Bursa Malaysia. It will be the CME. Okay? And the features that are key when trading futures is leverage, margin, long and short, and daily settlement. So what does that mean is, first of all, leverage. Okay? Well, we just said you are not going to own anything. So one of the things that futures does is to avoid ownership. And again, you may think of this like this is good or bad, depending on how you think about ownership. I mean, if you think about owning the house where you live, maybe you like ownership actually. But if you think about business, ownership means you have to pay. You have to pay for it. Whereas, and having to pay for it means you need to come up with all the money involved. Whereas if you avoid the ownership, you don't have to pay for it. You need to come up with some collateral money, which is called margin. And as long as you have this margin available, let's say, for example, $150, with $150 or less, you can purchase a futures contract or sell short a futures contract of micro ether. Those $150 are much less than the value of the contract. The value of the contract is way more. But you don't have to pay that much more. You just need to come up with this collateral money, which is something that is being put on the side. This is regulated by exchanges. The same would be the case with Bursa Malaysia. If you traded FCPO, for example, this is futures trading. This is not how crypto futures work. This is how futures work across the board, right? So you avoid ownership, and therefore you just need to come up with this collateral money. It's called a margin requirement. And as long as you have this money in your account, that amount of money is frozen during the life of the trade and unfrozen when you close the trade. And once it's unfrozen, because you close the trade, two things may happen. You may have made a profit or you may have made a loss. So let's say you made 500. So then your account got 150 back plus 500. Let's say you made $200 of a loss. So then your account gets 150 back. But then you get $200 of a loss. So you got plus 150 minus 200. So your account now shows minus 50. Okay? So this is how margin works. Okay? This is how margin works. It's basically trading by using collateral money instead of having to pay for the whole thing, which is what you need to do when you own, like stocks. When you buy stocks, you have to own them, so you have to pay for the whole thing, but not with futures. That's what we professionals do, and this could not have been done for individuals years ago, but since the birth of micro futures contracts, this is very easily be done by individuals, even with small accounts. So it's very, very cool. So you can use it for hedging, for speculation, for diversification. There are contracts that let you trade the price of an asset without owning it. So now you can speculate, Bitcoin is going to go up, Bitcoin is going to go down. You want to express the view that Ether is going to go up or down, and now you can do it without owning it. So plenty of safety and convenience by doing it this way. So now when you trade with margin, the margin is acting as a collateral. I will show you the specific figures in a moment. Again, think of 150 for now. For Ether, Bitcoin is different. Bitcoin is a larger contract, but again, I'll show you the specifics in a moment. So the fact that you trade on margin enables leverage, which means that your position sizes are larger than the capital you use. So you control larger capital with less capital. And all of this is mark to market in a daily basis. So the margin requirement, it's recalculated every day. So again, in a way, it's a way to add risk control to your trading, in the sense that if a market violently moves against you, even if maybe you got distracted, you're gonna get what's called a margin call, which probably means that Apex Securities in this case would close the trade on your behalf, because the market has moved by more than what the margin was implying, which means that the margin is set by the CME, by the way. So the calculations the CME did when it comes to how far they expected the market to move, those moves have surpassed what the CME said. In other words, we are dealing with a dangerous situation, and therefore, in this case, exceeding margin would take you out of the trade, and it's another way to think of risk management. Okay, so again, we are adding tons of safety here if you know what you're dealing with. Okay, and of course, if you treat this professionally with discipline, by making risk management your priority number one, together with discipline, which is just as equal of a priority, which is priority number one. Okay, so it's normal and recommended that when you trade futures, you use stops, or you are ready to hedge, or have some contingency plan in place. What you never want to do with futures is to go naked. Okay, which is what many people do when they trade stocks. Maybe they like a company, they buy shares, and when it goes against them, they're like, okay, I'm going to wait until it comes back one day, and then it took 5 years. So you cannot do that with futures because there is leverage involved, and that would hurt you more than help you. So risk management is the maximum priority. It should be with stocks too, but here it's even more. So don't need to pay for the full asset value, just a fraction. That's why it's called margin. And margin matters because it amplifies both profits and losses. So discipline and risk management. Hopefully I did make my point. Never ever forget the very serious conversation we just had about risk management with futures, okay? Having said that, it makes you so efficient, right? Because with little amount of capital, you control larger size, so you catch a move, and the profitability shines, okay? Margin requirements are set by exchanges, in this case the CME, and then brokers also have risk management departments, so sometimes they may increase the margin requirements just to be extra safe. So you are expanding your toolkit. Before you came to this session today, again, I assume that everybody trades differently and different assets, but let's pretend you traded stocks before. Well, now you know futures. Let's pretend that you traded futures before. Now you know crypto. Let's pretend you didn't trade anything before. Now you know crypto futures. So again, hopefully this session is helping you to expand the toolkit. Stocks, nothing wrong with stocks. It's direct ownership, but it's on leverage, and you can only go long, you cannot go short. Futures, flexible exposure. You have the leverage, which is a multiplier, and then you can go long or short, you decide. And then traders can hedge, speculate, diversify beyond equities by utilizing futures. Now, on top of that, we have crypto futures now with the micro contract size. So we are now adding all the beauty of digital assets with the whole flexibility of futures trading and the micro size. And that applies to micro Bitcoin and micro Ether, very well regulated on the CME. So thank you very much, CME. And these are the specific characteristics of those contracts. So let me zoom in here for a second. And I believe that after this slide, I have another one. And after the other slide, we're going to spend a lot of time on the charts, which is going to make this session to be way richer than only slides, even though I had to cover crypto and futures, so everybody is on the same page. So, to trade Bitcoin or Ether using micro contracts, you need to know their ticker symbol. So the CME set MBT for micro Bitcoin, MET for micro Ether, and you have seen me use that. There are many expiration dates available, many, technically speaking, 6 from month, H, M, U, Z. In futures, H is March, M is June, U is September, and the Z is December. But again, really, you don't need to know that. There are many expiration dates. And also when you trade and when you chart, typically, one more time, if I do MET, right? Micro Ether, CME, while you could manually pick one of those expiration dates that exist, which are many, as I just explained, the reality is that traders, we typically use the first one on the top, the continuous contract. So then we have a continuous chart that even if you go very back in time, it never ends, right? So it's very convenient. It's like charting a stock, but it's a futures contract. So that's what we normally do. Now, the contract size is 0.1 Bitcoin per contract or 0.1 Ether per contract. And the way they move is in ticks, because futures move in ticks. Let me explain that visually. So here is our friend Tenaga, one more time, which is a stock. So if we look at the price scale for Tenaga, we can see how that stock moves 2 cents at a time. 2 cents at a time. You can see that, isn't it? Most stocks in Bursa Malaysia move 1 cent at a time. Tenaga is a bit weirder in that sense, and it's 2 cents at a time. Now, with futures, typically, it's not 1 cent. So if I look at micro Bitcoin, notice that the minimum movement, we call that a tick, is 5. From 111,540, it goes to 545. So that's an increase of $5 per coin. Okay? The tick is 5. If we look at the micro Ether, each tick is 0.5. It goes from 4067.0 to 4067.5. So the tick is 0.5. Okay? So this is something specific to futures, where futures contracts got different specs. Okay? Those are what we call the contract specs. And you can see it here. 5 for the Bitcoin, 0.5 for Ether. And one movement, given the size of the contract, which is 0.1, would pay you in US dollars 0.5 US dollars per tick or 0.05 US dollars per tick. So you can see how micro Ether is much, much smaller. Okay, much, much smaller compared to micro Bitcoin. Okay, now these markets trade 23 hours a day in futures. So 23 hours a day. So they are closed 1 hour per day. And the trading hours, this is New York time. It's from 6 p.m. New York to 5 p.m. New York, which is 5 a.m. Malaysia time to 5 a.m. Malaysia time. In other words, it closes at 5 a.m. and reopens at 6 a.m. Closes 1 hour from 5 to 6 a.m. where we are still in bed. Okay, so super convenient for us to trade from Malaysia. Liquidity to the roof, both the micro Bitcoin as well as the micro Ether. And here are the current market, the margin requirements. You need 130 US dollars to trade micro Ether. You need 2,600 US dollars per contract to trade micro Bitcoin. Remember, the Bitcoin is much, much larger than the Ether, and therefore the required margin is also more. Okay? So, anyway, I didn't get too many responses there when it comes to doing okay, which probably means that you are indeed doing okay, but you are a little bit on the shy side. So if I may request, uh, no right to be shy any longer. If I may use a little bit of humor, even though I'm serious here, we are entering the most important session of the webinar. You will have questions, or I may have questions for you. So everybody needs to engage with me on the chat box, okay? So please let me know if everything is going okay as we are getting into the most important part of the webinar, okay? I need to make sure everybody follows. So this is example number one, the one we saw before. I want us to go deeper into this to understand. So in this case, the trader is a trend trader. And to analyze the trader is looking at a technical indicator called MACD. If you had studied technical analysis, you for sure know MACD. One application of MACD is that if MACD is above the zero line, which is the dotted line right here, whenever MACD is above the zero line, you would say it's an uptrend. That's a very simple application of MACD, but to be honest, very, very powerful. So Bitcoin, at the moment of the screenshot, was in an uptrend given the MACD reading that we have above the zero line. So I want to be a buyer. And price is reacting to a support and is giving us an indecision candle. So the trade plan is, if Bitcoin goes above the prior high, buy, where the blue arrow is. From there, the expectation is that the uptrend will develop, and if it gets to the purple line above, we close the trade for a profit. That's the target. If we happen to be wrong on the trade, and after we enter with the blue arrow, it goes against us and ends up below support, so we want a stop, and then we would have lost some money on this trade. So risk management in place from the beginning, even before I place the order. So in this case, we have the setup. We know that micro Bitcoin moves $5 at a time. That's the tick or point. Each tick pays 50 cents. And therefore, when this trade got to our target, which is what we saw earlier, so we happened to make $233. How did we make $233? Well, because we went to 107,580, which is the target price, minus the entry, which is 105,250, which is right there, 105,250. Okay, so we made 2,330 points times, there's a typo here, should be 0.5, times 0.5, this would have paid you 233. Okay, I got a typo there, I'm sorry about that, but to be honest, it doesn't matter. The important part of the math will be okay. If it goes against you and goes under support, then you still bought at 105,250, but now you took a loss at 104,420. So you would have lost 830 points times the point value, you would have lost 83. So in other words, this trade was risking 83 to make 233, which is a 2.81 reward to risk ratio, which I would assume is probably good enough for the majority of you attending the webinar. Some of you may be more conservative and require more. Some of you may be more active, aggressive, and are okay and happy with less, maybe 2 to 1, 1.5 to 1. Everybody's different. But this was this particular trade, and it took 5 hours to get to the target. So this is an intraday trade. This was planned using a 1 hour time frame. And the required margin was 2,600. So in other words, you made 233 by using 2,600. So thanks to the leverage, you have a return on margin of 8.96% in 5 hours. Okay? There are some people trading Malaysian stock that make 8% in a year, and they are happy. So this is 8% in 5 hours. Of course, you could have taken a loss, and then you would have lost 83. So that's your risk versus reward. Okay, but from a performance point of view, you can see the efficiency of trading futures and crypto futures in this case. So what is a real exchange versus what is a real futures contract? Okay, what is a real exchange and a real futures contract versus a so-called exchange in those unregulated crypto spaces? That's very important to keep in mind. Make sure you don't do this with one of those trading apps from some company from around the world that, the day you try to withdraw money, you may not be able to. So make sure that you do this properly. And the way to do it properly is very simple. You contact the Apex, you set up a futures account with them, you fund the account, $130 or more, which is the margin required, and then you are ready to trade. Of course, it's always good to have a nice extra amount of money as a buffer instead of just having such tight money to trade. So you want to be above margin generously, but again, with very little capital, you could be trading. So if you compare spot trading with apps versus crypto futures trading with a CME. So with the apps, unregulated, you can only buy. With futures, long or short. Custody, if the company that send you the app to your mobile phone disappears, your money is gone. If you trade with crypto futures with Apex, your money is safe. Apex is licensed and under the whole regulation of Malaysia, Securities Commission, etc. So you are fine. No leverage when you trade those unregulated apps. You trade on leverage with very efficient use of your capital with Apex. Counterparty is going to be the company, the app provider is going to be trading Bitcoin against you. So if you buy Bitcoin, they sell it to you. So if you make money, they lose money, which is, they're going to make sure that doesn't happen. Whereas if you trade crypto futures, it's central clearing in the CME. So the counterparty is not CME, the counterparty is not Apex. You have a whole set of market makers and all sort of clearing members on the CME exchange, and therefore there is liquidity, and the person on the other side of the trade just happens to have a different view, but is not trading against you. There is no conflict of interest. Regulation with those apps, often none. Regulation with the CME and Apex, absolutely regulated internationally with CFTC in the US, but also in Malaysia with Securities Commission and Bank Negara. So anyway, market outlook, and I'm going to take maybe 5 to 10 extra minutes, everybody, so you guys know, and Suling as well. I'm going to go over market outlook. I'm going to be very pragmatic. I am a quantitative strategist, so I use artificial intelligence for what I do. So I have prepared, just a few moments ago before this webinar, I have prepared a few charts I would like to share with you. So give me a moment, I will bring in some information to the screen. So I'm going to put a few charts together. No, I didn't do this right. So here we go. So this is going to go here. And then I'm going to go this one. So just bear with me and you will see how this is going to be very, very useful to understand more about what to expect. One more. Okay, so what do we have here? Sorry about getting you waiting. What do we have here? Well, on the top, we have Bitcoin. Yeah? On the top, we have Bitcoin. We have a 5-day horizon for the Bitcoin on the upper left, and we have a 21-day horizon for the Bitcoin on the upper right. So monthly prediction on the upper right, M for month, weekly prediction on the upper left for Bitcoin. And below, we have Ether, 5-day and 21-day for Ether. Okay, so again, monthly for the Ether and weekly for the Ether. So I'm using two AI models, a deep learning model and an XGBoost model. I will not get into technicalities here, but basically I am predicting two things using machine learning and AI. The first thing that I am predicting is Bitcoin or Ether likely going to go up or down? That's the first thing I am trying to predict. And the second thing I am trying to predict is give me a moment because I don't have the size of the windows I want to have. Here we go. And the second thing I am trying to predict is how far up or how far down they're going to go. So notice that when it comes to 1 week later, Bitcoin is predicted to go down. Okay, so the gray box shows you where we expect Bitcoin to go into next week. Again, this is not financial advice. This is just market outlook that is not even mine, meaning that, I mean, it's programmed by me and developed by me, but this is machine learning. This is done out of data. Okay, this is machine learning, and therefore it's the use of data and the intelligence of the machines. Okay, so the prediction is down, and we are looking at a magnitude of the move of minus almost 8% for the Bitcoin into next week. So time to short. Now, if we look at the Bitcoin into 1 month later, so we are looking at the Bitcoin to still end up down, but we would see swings of minus 6%, 7% down, and up to 9.85% up. So in other words, tons of volatility going down and then going up and then going down again. That's the prediction for the next week and the next month for the Bitcoin. For Ether, the prediction is very similar. But notice that the sentiment that AI identifies is way more bearish. So the prediction shows Ether, micro Ether, to be down by minus 17%. And into 1 month, still minus 15, 16%, and up only plus 6%. Notice how Bitcoin would be minus 6 plus 9, minus 6 plus 9 versus minus 15 plus 6. So much more bearish for Ether, still bearish for Bitcoin, but less aggressive. Later, I will tell you how to use this information, and we'll plan on 2 trades before we complete the webinar. Now, what if I look at next quarter for Bitcoin? So next quarter for Bitcoin, next year for Bitcoin, next quarter for Ether, and next year for Ether. Okay, so we have next quarter, above is Bitcoin, below is Ether, next year, on the right is yearly, and it's above is Bitcoin, below is Ether. So notice how 1 quarter later, we would still see Bitcoin down with swings, similar swings, minus 8 plus 8, ending the year down after a rally up to 87%, surpassing the 200% mark. So you can see that there is a lot of bullishness built in, potential for bullishness built in Bitcoin, and we are trading around 100, let's call it 120, less than that, but let's call it 120,000. So we may get to see that market reach 200,000 before, not before the end of this year. I'm talking about 1 year from now, which is October 2026. Now with Ether, we still see down and down. So 1 year later, the expectation will be to be down, but be down by just a little bit in the case of Ether and the quarter, and up to 37%, and down up to minus 47%, and then see rallies of up to 85% up. So in other words, if we think of a 1 year time horizon, we should see rallies to the upside, which are significant in all cryptocurrencies, significant to the level where we may surpass 7,000 for Ether, we may surpass 200,000 for Bitcoin. So very significant rallies, but then go back down. Okay, so thank you futures, we can go long and short and take advantage of both moves instead of owning Bitcoin on the chain and be super happy in the middle of next year when you're reaching 200, and next thing you know, by the end of by October next year, next thing you know, all those profits have evaporated, right? And emotional trading kicks in and it's a disaster. So this is the prediction. This is the market outlook, and again, this is again not financial advice. This is for education purposes, and it's just bringing some data insights to the conversation. So it's not a human opinion. It's just what the data says. Okay, because humans, we can be subjective. Now, how can I use this information? Okay, so let's do it. I'm gonna go into the chart. and I'm going to plan on 2 trades. So we said Bitcoin it's more bullish. We said Ethereum is more bearish. That's what we said into next week, into next month. So I am looking at a daily time frame. So I'm going to be planning on a multi-day trade. I'm not going to do intraday trading now. I'm going to plan on a multi-day trade. And because on a multi-day level, Ethereum was more bearish and Bitcoin was more bullish based on my data analysis, I'm going to apply on buying Bitcoin and shorting Ether. Okay, now I need to define entries and exits. And the way I'm going to do that is I'm going to use a Bollinger Band. Again, there are many different ways on how to trade, but I'm going to use a Bollinger Band. And what I'm going to do for the Ether, I want to short Ether, isn't it? So I'm going to click on the red button, short. And what I would like to do is I would like to find a target. Let's make sure my target is far enough so the trade makes sense. So the Bollinger Band, every time price goes through the Bollinger Band, it tends to go back below the Bollinger Band, go back below the Bollinger Band, go back below the Bollinger Band, go back. So I don't want to be greedy. I want to take profits around where the Bollinger Band is. Somewhere in here is going to be my profit before it turns around. And because I can see right there is a technical support, so that line is going to be my target. Okay? So if it pierces the band and reaches the purple line, I'm going to be out. And I am expecting this to be in a downtrend. So if the market is in a downtrend, typically the behavior is come to the average, keep going, come to the average, keep going, come to the average, keep going. So then I'm going to set my blue line as my stop. Okay? So I'm going to be willing to take profit at 35.63.5 in this particular trade example for educational purposes. If I'm wrong, I want to have a stop, which is the blue line, 4276.5. That's going to be my stop. Okay. And then my entry, okay, I want an entry in a place where if I enter now, my trade is going to be at 2.43 to 1. If I enter now, okay, I will be risking 2.43 times less money than the money I would make if I'm right. I would be risking 166 to make 404. That's 2.43 times less. So let's say your trade plan tells you that you want to trade 3 to 1s. So then I'm going to move my entry a little higher, just so my reward to risk ratio becomes 3 to 1. Good enough. 2.99. Okay. So I'm going to enter at 40.98 with a stop at 42.76 with a target 35.63. So again, I'm just waiting for this to rally a tiny bit, and then I'll be short, and hopefully it comes to my target, which should be because data shows Ethereum to Ether to potentially be bearish based on data. And if I'm wrong and it goes against me, I'm going to be stopped out. So I'm going to be risking $142 to make 427. That's the trade. That by the way, that is with 8 contracts. Okay. So now, what if you tell me, oh, but I only have my budget to trade is I want to risk $100? Okay. So then you use 5 micros. 5 micro contracts would risk you $89, which is less than 100. Let's say you tell me, oh no, my maximum budget is 50. Okay. So you do 2 micro contracts. 2 micro contracts would risk you 35. Okay. So you decide your number. I'm going to go with $100 of risk. Okay. That's 5 micro contracts, and now you just click sell button in this case, and now the trade is there waiting to be filled. Again, my entry is 98. The current price of micro ether is 52, so it just needs to rally, just rally a little bit, a little high. Earlier today it was there. So just be patient and wait until it rallies a bit more, and we'll be entered. This is how simple you can plan your trades with a micro crypto. Now, what about micro Bitcoin? So I'm going to move to micro Bitcoin here, and with micro Bitcoin, I want to be long, not short. So I'm going to click the blue button because my data insights, thanks to AI and data, suggest Bitcoin to move down, but have very powerful swings to the upside. Therefore, here I don't want to be aggressive. and enter soon. I want to let Bitcoin to go below the Bollinger Band. And once it goes below the Bollinger Band, now I want to ride it back up towards the blue line. So here I want to do a mean reversion trade like this one, okay? Like this one, like this one, like this one. Catch it outside the band and trade it towards the blue line. So in other words, when I do that, so my target is going to be the blue line, 116,687. That is the blue line. That's the blue line right there. My stop, okay, I need to find a good place for the stop. So if my entry is going to be below the Bollinger Band, I want my stop to be this particular support right there. So that's going to be 102,090. And again, let's go with, you want it to be 3 to 1. So I'm going to drag my entry down to right there. Something like that. So now it's a 3 to 1. As you can see here, it's a 3 to 1. And if I was to use one contract only, okay, one contract only, remember the Bitcoin is a bigger contract size. So this one is risking for us $366. Okay. So if I'm right on the trade, I'll make 1,093. And if I'm wrong on the trade, I'll lose 366 in this case. Okay. With one micro. So here we go. Order has been placed. Okay. What did I just do there? Take profit, stop loss. Oh, sorry about that. I think I may have clicked in the wrong place. Here we go. It's 50, right? Yes, correct. Okay, so that's the trade. Okay, well, here's the order. Okay, so if Bitcoin falls down, okay, and I want to let it fall down because the prediction of my data was to go down. So I want it to go down, but then I want to catch it back up because we also saw based on the data insights that there was more potential for powerful swings to the upside. So summarizing some of the key things as we are nearing the end of the webinar. And thank you for working with me, everybody. I've been quite intense, sharing a lot of information. Hopefully that was not confusing. So Bitcoin can be seen as digital gold. You can fight inflation with it. Everybody trades it, institutional and retail. Interest rates, inflation, liquidity cycles impact Bitcoin. Is a real component of the real economies in 2025. Whereas Ether, it's a different type of currency because it's more intelligent as a blockchain. You can have the smart contract. So it's retail heavy, plus also many developers that develop technology for it. So there is a lot of innovation and also a lot of economic velocity, which impacts the valuation of Ether. So as we are reaching the end of today, and I am flashing here questions. I also want to leave on the screen while I take care of your questions. I want to leave on the screen this QR code in case you missed it earlier, so you can go and read educational articles on trading futures. Anyway, Sulin, how was it? How are you? How is everyone? Do we have questions?
Very quiet. Let me see. And first of all, thank you so much, Jose. Very insightful sharing. And then let's see if we try to open one or two questions to the floor. And if you have questions, please type in the chat box.
We also understand this is the technical ending time of the webinar. So of course, if you send your questions via email, of course we'll sure Sulin will be happy to forward it to me. I'll be definitely happy to answer you.
Sure.
So not a problem. We're here to help. But as said before, do not be shy. If you have any question, basic or advanced, go for it.
All right. I saw one question. It's about the trading strategies. Okay, hi. What is the key technical that you will recommend for these markets? Maybe from your personal experience, the most proven indicator other than Bollinger Band. Just now, you're focused on the Bollinger Band, right?
Yes, it is available in Japan because
Yeah.
it's generic. It's available in all trading platforms, no matter the trading platform. So just wanted to bring in something generic. Okay. Now, what I would do is I would welcome you to go and take a look at our website. As you can see, the name of our company is Tradictive, or our website actually is Trade with UFOs.
So, Jose, you also share the trading strategy on this, your page, Tradictive.
Yes, all those articles talk about trading strategies. So all those articles are very, very rich on ways on how futures can be
I
traded,
see, I see.
including crypto futures. But beyond that, since the question was about my favorite indicator, so then what will come to my mind is UFOs. And if you don't know what UFO trading is, so this exceeds the time that we have today for me to give you a proper explanation. So I would like to welcome you to visit our website and take a look at what is UFOs. What is UFO trading?
I
It
see.
stands for unfilled orders, and it's probably going to be eye-opener if you've never seen it before. We have also a YouTube channel. You can take a look at educational videos over there too.
So how frequently you will share your idea? How frequent?
Uh, to a minimum once a week, we are
see.
publishing things
So you're
to
more
the minimum.
you are more on the long term view on this market.
Actually, some of the articles that we publish are intraday trading, and some of the articles that we publish are long-term trading as well. So we try to tackle all angles because we believe in diversification, and diversification is not only to use crypto futures. That is diversification indeed, but diversification is also time diversification. Whereas some of your trades may be done intraday, where some of your trades may be done on a different account and they're long term or mid term, and you diversify with your time exposure as you diversify with the assets. So, we are multi asset traders, and we do it all because we believe in diversification. So, those articles represent and reflect that mentality.
Okay. I got one question quite related with Malaysia traders. So in Malaysia, the trading hour is quite different from US, and especially US product is open almost 23 hours. So especially if for this product like crypto futures, what is the trading hour and time zone you will recommend it for them to follow?
Anytime.
Anytime.
Absolutely anytime. I mean, remember, crypto futures are going to be closed from 5 a.m. our time in Malaysia. I am in Malaysia too. I live in Malaysia. Okay. So when the question was, for Malaysian traders, just know I am a Malaysian trader too, in the sense that I trade from the same time zone as Malaysia. I'm here. So those markets are closed from 5 a.m. our time to 6 a.m. our time. That is, whenever you are awake, the markets are open. And because it's CME, the pool of liquidity is humongous. So in other words, anytime during the day you can trade. Fair enough that you have more volatility at some times during the day. Maybe when the European Union is going to notify a change of interest rates, which is after hours our time, maybe you have a peak of volatility that day. But that's not every day.
Normally it's 2 a.m. 2 a.m. The interest rate, the announcement normally is 2 a.m. Malaysia time, right?
That is when it's an interest rate in the US. When it's a European interest rate, for example, like the EU, that would be afternoon hours our time. And again, this is only interesting for the aggressive volatility traders. One recommendation, to be honest, is to kind of stay away from volatility when it becomes too much. And volatility typically spikes up often too much when certain announcements are made. For example, interest rates, which is, you're correct, is 2 a.m. One Wednesday per month in the US. So that day, it's better to stay in bed, to be honest, unless you are an extremely advanced and experienced trader and you have algorithmic trading methodologies and you let your computer trade for you while you sleep. But which you could do. I mean, Apex can provide you with the technology to do that. But, again, I would not necessarily recommend that. For an individual average Malaysian trader, any time during the day is valid. The trade examples I showed you were using the daily time frame, the 1 hour time frame. You plan the trade, you place the orders, you turn off your computer, and you have a stop in place, you have a target in place. If you're right, you're right. If you're wrong, you're wrong. If you're right, you make your 3 to 1. If you're wrong, you lose a third. And that's it. It's supposed to be simple, effortless, should not be stressful. We are actually in a very good time zone because you could benefit from the peak of volatility when Japan begins trading, early morning, the peak of volatility when London starts trading, beginning of the afternoon, and if you want to trade after dinner, beginning of the evening, anywhere between 8:30 p.m. our time to 9:30 p.m. our time, you have a peak of volatility from the US opening too. So anytime is good.
All right, thanks for your recommendations. And I think we stop here for the Q&A sessions. So thank you for the question from Flo. And again, big thank yous to Jose for taking the time and share the answer so thoughtfully. So if we have a further question, maybe after the webinar, we'll try to email you. Or maybe next time we can have a sessions on more focusing on the trading strategy.
Yes, for sure.
If there's chance.
I think that Apex clients should get back to you, open their accounts, get ready, and whatever they need, share with you. And as a company, I know you, and I know you well, and therefore I know you're gonna take care of your clients. So if we ever need to organize more supporting sessions on strategies, happy to help for sure.
Okay, so please allow me another 5 minutes and do some summary and closing. I share my slide. Loading. Okay. All right. Okay, so before we wrap up, please allow me to briefly walk through you some of the products and ongoing events that Apex Security have at the moment. So here's the CME Group products offered by the companies. So we can see is CBOT, the grains, soybean oil, the micro series soybean oil, and also others micro series indexes like Dow Jones, Nasdaq, S&P. So gold. So now it's quite a popular product now, all-time high at the moment. Okay, and silver, we also have micro silver, micro crude oil. And also the micro Bitcoin and Ether futures we have just go through a moment ago. Okay, next, if you want to learn more about foreign futures, you can also try to explore the education sections on the CME Group website, and they have excellent learning material also. Next, do follow us on YouTube and Facebook to stay updated on our latest market insights, webinar, and upcoming events. We also have a trader community channels on the Discord. Feel free to join us and be part of the discussions with fellow traders. Okay. Next, a quick highlight on our ongoing events. We have currently running a derivative trading challenge 2.0. So it's a real trading challenge with the real money. So I've decided to let participants experience the excitement of live market trading. And here's the latest leaderboards. Okay. So throughout this challenge, we still have a 19 rush hour missions to go with the total price of worth 570 ringgits waiting to be won. And good news, the registration is still open until 16 November, so there's still time to join. And this is the last one. If you have any inquiries, here is our contact information and dealing support hour. So feel free to reach out. We are happy to assist. Can take a screenshot if you need it. Okay, once again, we thank you everyone for joining us this evening, and a special thanks to CME Group and our guest speaker, Mr. Jose, for sharing such a valuable insight. Thank you, Mr. Jose, and have a great evening. Happy trading to everyone, and happy trading to you. Okay,
thank you so much. Thank you, everybody.